The Canadian dollar, commonly known as the loonie, slipped 0.5% against the USA dollar today, amid mounting uncertainty over trade negotiations between Canada and the United States. This decline reflects growing concerns among investors and analysts after former USA President Donald Trump issued a warning that tariffs as high as 35% could be imposed on Canadian goods. If no agreement is reached by the fast-approaching August 1st deadline, the threat has rattled markets and cast a shadow over the already fragile cross-border trade relationship. This sharp move in currency markets underscores how sensitive the Canadian economy is to USA policies. Canada sends nearly 75% of its exports to the USA, and the looming tariffs could heavily impact key sectors such as automotive, aluminum, dairy, and lumber. These industries are integral to Canada's GDP and employment. Any additional barriers could not only hurt business confidence, but also stifle economic growth in the second half of the year. Investors are also anxiously awaiting the upcoming Bank of Canada rate announcement scheduled for early next week. Economists believe the central bank is now caught between rising inflationary risks from potential tariffs and an already weakening loonie. Softer currency makes imports more expensive, adding to consumer price pressures at a time when Canadians are already grappling with elevated living costs. Examples from previous trade disputes give reason for concern. During the 2018-2019 trade tensions under Trump's presidency, Canadian steel and aluminum exporters faced tariffs that disrupted supply chains and forced layoffs in parts of Ontario and Quebec. A similar outcome now could trigger job losses and a sharp decline in consumer confidence, especially if retaliatory measures are introduced by Canada. Business leaders are voicing alarm. The Canadian Chamber of Commerce urged the federal government to seek diplomatic channels to resolve the conflict swiftly. Meanwhile, farmers, automotive and manufacturing groups are warning that without clarity, investment decisions will be delayed or canceled entirely. On the financial markets, volatility has spiked. The Toronto Stock Exchange saw a mild decline as investors pulled back from Canadian equities in favor of safer USA and global assets. Bond yields fell slightly as traders began pricing in the possibility that the Bank of Canada might hold or even cut rates to cushion the blow of a potential trade shock. At the consumer level, a weaker loonie could mean more expensive groceries, electronics, and travel costs, especially for Canadians vacationing in the USA this summer, with inflation already stubbornly high. This adds pressure on households trying to balance their budgets. Political reaction in Canada has been mixed. While some leaders blame USA, others have criticized the Canadian government for not preparing more aggressively for this eventuality. There are calls for increased domestic production and diversified trade ties, particularly with Europe and Asia, to reduce long-term reliance on the USA market. As the August 1st deadline looms, all eyes are now on both Washington and Ottawa. Whether the two governments can reach a deal in time or at least agree on a path forward will determine the loonie's direction, investor sentiment, and Canada's economic outlook in the critical months ahead. With August 1st just days away, the future of Canada's trade and economic stability hangs in the balance. Will diplomacy prevail, or are we on the brink of another trade war? The Canadian dollar's sharp decline, investor jitters, and pressure on key sectors like auto, dairy, and aluminum paint a grim picture if no deal is reached. Should Canada stand firm or bend under USA pressure? Let us know your thoughts in the comments below. If you found this video insightful, do not forget to like, share, and subscribe to our channel. West is best for more powerful updates on global economics, politics, and market moves. Stay informed, stay empowered.